The closure of Hainan's borders, a major foreign policy move in recent years, has captivated the attention of many both domestically and internationally. Since the pandemic, China has seen a lack of significant economic measures. While post-pandemic economic stimulus policies haven't completely failed, the persistent low confidence among economic observers both at home and abroad is undeniable. Hainan's border closure is undoubtedly big news in China. Even before the closure, a Hainan-based purchasing frenzy had already swept the nation. After the closure, similar industries will likely develop rapidly. Many overseas Chinese-language media outlets and bloggers scoff at this, believing that Hainan's closure is the Chinese government's attempt to create another Hong Kong or Pudong. This is not entirely wrong, but the differences are significant and don't need to be directly equated. The Hainan border closure has at least the following points to consider, creating a win-win situation for multiple parties in the short term. The following analysis is unbiased and based entirely on the shift in power. Firstly, the closure of Hainan to the mainland is a major benefit for the Chinese government. Regardless of whether the top leader is aware of the ulterior motives behind Hainan's development, at least the scale of foreign trade can steadily increase in the coming years. Faced with trade pressure from the West, especially the United States, China's foreign trade, if things go smoothly, will decline after a period of strength. With the Hainan Free Trade Port, all foreign trade can be attributed to Hainan. If Hong Kong played a similar role during the Mao Zedong era, then now, Hainan can indeed replace Hong Kong's position in the central government's mind. Beyond foreign trade, when foreign trade, or rather, quasi-foreign trade, passes through Hainan, foreign exchange will naturally be a focus for Hainan. In the foreign exchange structure, the most commonly accepted explanation is that it is denominated in US dollars, meaning that not all foreign exchange is in US dollars. I will not comment on how overseas media and individuals estimate the true foreign exchange, as there is no real data available for reference. However, after Hainan's closure, foreign exchange passing through Hainan, including RMB, should rightfully be counted in foreign exchange reserves. This is beyond doubt. In other words, Hainan can be both a safe haven and a firewall for foreign trade and foreign exchange. Secondly, various forces within China should have a presence in Hainan. They naturally understand that China's current environment is not conducive to peaceful development and attracting foreign investment. Therefore, Hainan serves as a tool for capital seeking to relocate from the mainland. It's important to remember that not all capital will be transferred abroad, but rather out of the mainland. The two are different. Directly transferring overseas is an option, but capital that lacks such channels before Hainan's closure is now unable to do so. Some capital still prefers to operate domestically, as many people's success is not due to their own business acumen, but rather the backing of domestic forces. Hainan's closure provides them with a more favorable environment for competition and market development compared to the mainland. Note that I'm referring to a competitive environment, not a business environment. The difference is self-evident. Thirdly, Hainan's closure reflects the deepening development of entrepot trade, which China vigorously promoted in recent years. Southeast Asia was previously China's entrepot trading partner, but Trump's precise tariff containment has led to clear alignment among Southeast Asian countries. This is a double blow to China's foreign trade. China still needs entrepot trade, but now it must create its own entrepot locations, and Hainan is such an option. Fourth, the Chinese government also needs to provide an explanation domestically, which translates into boosting domestic confidence. The government should certainly know that this cannot solve the fundamental problem. But what if the government itself has no intention of solving the fundamental problem? With the shift in economic drivers and multiple rounds of stimulus, policy and market tools have already been exhausted. Yet the narrative of deepening reform must continue. Hong Kong was destroyed by radical youths and hostile foreign forces and traders. Therefore, Hainan will be created. This narrative, coupled with Hainan's future entrepot trade volume and record-high foreign exchange figures, even in RMB terms, will allow China to shift from one victory to another. Fifth, external forces will also use Hainan as a gray area. As appropriate, foreign trade disputes are not decisions made overnight for countries like the US and China. Everyone needs time. While the trade war is fierce, it is not a war of unilateral action. Both sides are focused on the future layout of the industrial chain. In subsequent negotiations, areas where neither side is willing to back down can be temporarily shifted to Hainan when both sides are eager to reach a consensus. This gives both sides a way to save face, which would be a positive outcome. Sixth, the Chinese people will also be eager to participate because the Chinese are superstitious about policies. The dismal state of the Chinese stock market doesn't mean that Chinese people are unaware of the meaning of a policy-driven market. On the contrary, they all understand it, and their gains and losses in the stock market are also based on policy. Hainan is currently the target of these speculators. These people can range from those with only tens of thousands of yuan in savings to those with tens of millions in assets. Their participation can be through direct investment, purchasing on behalf of others, contract manufacturing, or investing in Hainan-related stocks and wealth management products. Chinese people lack the capacity to think critically and change the current state of China, but they are unwilling to give up opportunities that may not make them money, but could potentially make others money. Refined egoism and greed make Chinese people always want to test the waters of new, policy-driven initiatives. Even without direct investment, the Hainan concept alone is enough to generate artificial traffic. Why not take advantage of it? So what will the future of Hainan be like? Will it be like Xiong'an? I think this is a difficult question to answer. The key lies in how the government, society, and capital cooperate. The obstruction of foreign trade will inevitably lead to Hainan's trade, shifting from exports to domestic sales and from exports to imports. There's no need to worry about whether the public can understand it. As long as the government-controlled trade cycle can function, even some bugs are acceptable. China's economic focus has long shifted from private economic vitality to political security. Hainan can be fully managed, and its trade cycle supply chain can be completely controlled, which is more meaningful than a mere trading port. Moreover, the public isn't truly without benefit. Stagnant consumption can be stimulated by using Hainan as a trading port outside the customs, or as a gimmick to rekindle previously stimulated demand for products like Russian specialties. The public feels they've benefited, as long as they get what they perceive as a bargain, regardless of whether the border is closed. In short, Hainan's emergence is a win-win situation, but not a long-term, stable one, because its existence is inherently instrumental. Perhaps when China fully opens up, Hainan's special trade status will come to an end. Or perhaps the Hainan concept will be used until it's exhausted, ultimately becoming a relic. Hong Kong is Hong Kong because of its connections with the West. Hainan is destined not to follow Hong Kong's path, but it can become an excellent tool for domestic sales to drive exports, generating impressive sales figures in the coming years.